Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Hey traders, checking in on the broader market. So the bulls are keeping their control. We started the morning by saying, are any of our major sectors going to break the low of yesterday to see daily consolidation begin? And the answer was no. So there's no daily consolidation. If we start to pull back on the daily, anything above 312 for me is a daily high or low, which means we have about 4% of space to work with to maintain the daily uptrend, which means tomorrow we could drop 2.5% and still be in a daily uptrend. So the bulls certainly enjoy having that kind of cushion to work with. After hours here, we've got earnings from Tesla, which isn't going to have much of an impact on the broader market. Bullish reaction from Tesla, but still under the all-time high, and currently up about 5% or so. And Microsoft, pretty much a non-reaction. You look at Microsoft, 5-minute time frame. Here we are down at 205, levels not seen since Monday. So it's not really changing anything. It's not a bullish reaction, but we're still in a daily uptrend. Anything above 201.39, that key support level, keeps the bulls confident overall. And QQQ had initially a little bit of a bearish reaction, but here we are after hours. Again, not really moving the needle at all as far as the tech sector is concerned. We'll see if that changes when the bell rings tomorrow and there's a lot more dollar volume at play. I don't suspect it will, but that just shifts our focus now to next week and looking at other major players' earnings. We still have to see what Amazon and Apple and some other names do, but overall, bulls are pleased with this earnings reaction. Bulls had more to lose than the bears did, certainly, heading into this earnings reaction season. And for right now, they're coming out just fine. We're not seeing earnings reactions derail bull momentum. SPY after hours, right under where we closed. IWM broke the low of yesterday with no bear follow through. There was a little gap at 146.85. Didn't fill it. Broke the low of yesterday by 17 cents. Overall, not a whole lot changed between yesterday and today. Pretty much closed at the same level. QQQ. So QQQ is trying to set a quick little daily high or low. Could this be a cup and handle on the daily time frame? That's possible. You could view it that way. Failed to break the all-time high. Healthy daily bull flag of consolidation. But I would have needed to have seen a Microsoft bullish reaction to earnings if I were going to be looking for this chart to break out to a new all-time high in a significant manner in the short term. Still possible, but as of right now, we're just watching for a daily higher low to try and form. Compared to 255.62, the bulls need to change the hourly trend back in their favor, and they actually did that right at the end of the day. So they have to follow through with that and try and see a new all-time high. The healthcare sector has been this quiet, today I was calling it not flashy, not sexy, but a higher low, or we should say a new all-time high, 4 days in a row. It's just not significant in terms of the gains. But it's been a steady rock that the S&P 500 bulls can look to for comfort. Because pretty much the last 3 days, we're seeing the tech sector and the financial sector inverse to each other. A lot of back and forth action, a lot of positioning and sector rotation going on. Through all of that, XLV has been the steady bull. Higher low and higher high every day the last 4 days. And an all-time high every day the last 4 days. So the bulls are keeping control here. Plenty of space for a daily higher low to form once we top out. Healthcare bulls are strong. Financial sector. So XLF didn't really do much today either. Closed, break even, and a daily inside bar. The levels that I care about, 24.43 and 23.75 support. And bulls want a more convincing break because I would call 24.43 a double top at this point. Need a more convincing bull break for some further follow through. And there was, again, an inverse relationship between XLF and QQQ for a decent part of today. 15 minutes of bull, 45 minutes of bear, 30 minutes of bull. QQQ. 15 minutes of bear, 30 minutes of bull, a lot of bear. And as this dump was happening, I was just watching XLF and saying, is XLF going to keep strong? And it went back to the high of the day. So as QQQ dropped to a new low of the day, XLF got back to the high of the day. It hit a new high of the day, but only by a penny. But again, that's enough to to calm the bulls down and not have us looking for a dump, because we know that the market does not dump unless all of our major sectors are at the low of the day at the same time. That is a takeaway that is very worth noting. And you can say to yourself, just set a rule. I will only be an aggressive bear if that condition is met. And you can play bearish on individual names or individual sectors, but as far as the market is concerned, can't be an aggressive bear if all of our major sectors are not dropping at the same time. Cannot be an aggressive market bear, yada, yada, yada. Biotech sector, healthy daily consolidation, trying to set a higher low. Bulls would like to hold 114.56 to remain their strongest. We are coming off of the all-time high from yesterday. It's a decent amount of pullback from that all-time high, but still in a daily uptrend. SMH. So semiconductors, inside bar today, and AMD exploded for the bulls. We had a resistance zone where we were rejecting by pretty much $1 range with major rejections over the last 6 months. Less than that, but 4 months, 5 months. And we blew through it on huge volume. NVDA had a decent day for the bulls. Not nearly the same, but SMH, just a daily inside bar. If it breaks bearish, we look for a daily high or low. If it breaks bullish, we're at the all-time high. The VIX. So the VIX, potential daily bear flag, a little bit of a bounce. And again, it's something that I see at least multiple times every week. And it's someone saying, the VIX is up and the market is up. Is this a clue? Is the market about to dump? And my answer is, this game is not that easy. You can't just look at the VIX and say, oh, the market's about to dump. There's our clue. There are definitely clues you can get from the VIX, but in my opinion, you need to devote pretty much a huge chunk of your trading and of your day to the volatility index alone if you were going to learn this instrument and be able to utilize clues from it. But for me, it doesn't mean secret clues. It just means hedging. And that makes absolute sense to me when the market is running full steam ahead for the bulls and when things are their strongest and we're heading into some key earnings, you want to hedge a long-term portfolio. So it makes sense to me that the volatility index sees some upside because people are hedging long-term portfolios that have very significant gains over the last couple of months. Gold and silver, very nice bull breakouts overnight last night. Turning on the juice. Gold is looking at the all-time high right now. We are at the highs after hours here. And that all-time high is 1921. So here we are, 2.5% away roughly from a new all-time high in gold. Daily time frame, plenty of space for a higher low. 4-hour time frame, plenty of space for a higher low. Metal bulls in complete control. Silver, explosion. So now's the time where you're going to start seeing everybody talking about silver. It already started last night, social media, and you see the people that are buying late getting interested in silver now because of that hype and buzz. Obviously now is not the time to be getting bullish silver. If you want to get into silver, you're waiting for a daily high or low at this point. You have to just chalk it up as a missed move. Daily bull flag confirming with huge follow through. Big time volume. And keeping the uptrend going. 4-hour high or low, 21.38. Here we are back at the high. Testing resistance. I'm going to start getting interested in bear miners for a short-term trade if we see another gap up open in the miners tomorrow. And we didn't gap up open today. But I'm starting to raise an eyebrow, but doing so very cautiously because I do not want to fight these metal bulls. Just something I'm keeping an eye on at this point. And I do like the fact that my only metals exposure at the moment is physical because I have no temptation to try and sell it. And it's a long-term, multiple decade position. And it certainly helps that I can't just click a button and exit that position. Congrats to the bulls. Dollar is still extremely weak. Continues to drop lower high every day for the last 4 days. We're looking down at the COVID dump low of 94.65 is the only nearby support. And again, if that level breaks, we're zooming out to the 6-month time frame and watching 88.25 and the tightening range, keeping in mind that we could potentially stay within this range for multiple years, with every candle being 6 months. If we were to come down and form a higher low compared to 88.25 and then start a little bounce, next thing you know, 2 years had passed. Robots run the earth. Stock market doesn't exist anymore. We'll see. But for now, still free fall. All about 94.65. And the metal bulls are loving this dollar weakness. So miners are keeping their hourly uptrend. That's the most important factor for me. So yesterday we had a wide range in the first candle, and that range dictated the day. Look at today. Wide range dictating the day. So we're seeing the range of the day dictated in the first hour of trading 2 days in a row now. And then from there, we just tighten up within that range. So if the bulls can open tomorrow above 41.33, the hourly uptrend will remain intact. Let's see what these metal bulls do overnight tonight. And again, they did cool things off with enough consolidation to definitely see some more follow through now that we're back up at the highs. This silver 4-hour consolidation was very nice. 94 RSI all the way back down to 69. Hourly uptrend is our guide on the bull miners. Oil. And that's one more point on the bull miners. You can see they're getting a little bit exhausted. The fact that the S&P 500 is at the COVID high and the metals are at their highs and you don't have a big green rocket candle just shows me a little bit of bull exhaustion in the miners. Oil, daily inside bar. So again, as long as we're holding 39.97, daily uptrend remains intact. Bulls keep complete control. That is the most important support level. If we break the inside bar bearish, that's the level we look to. And if we break it bullish, we're back looking at the COVID bounce high. Natural gas, daily inside bar bull break. So now we're watching anything under 1758 for a daily lower high. And if these bulls are going to set a weekly higher low, they need to change this daily trend back in their favor. So if I'm an aggressive bull, we're trying to be an aggressive bull looking for a weekly higher low entry in natural gas at this point. I want to see that lower high compared to 175. I want to see a higher low. I enter on the higher low and I put my stop under 1574. That way I have a very low risk. If I'm right, I nail the weekly higher low and we look for a weekly trend change for a longer term bull move. And if I'm wrong, it's a small loss. That is my favorite kind of trade. And I do it all the time, day trading, where we are looking at a bull move, we're looking at hourly consolidation, and I look for the 5-minute trend change for the hourly higher low to be set, and I look for a setup where we're in a 5-minute downtrend, and we see a big enough bounce that we create enough space where I try and enter the 5-minute higher low, and I'm definitely wrong at times when I do it, and I stop out for a small loss, and when I'm right, I nail the hourly higher low. That's all we got. Good news is Mama Duck's back with 3 babies. That was the highlight of my day yesterday. I got some footage today. I'll share that tomorrow. Haven't uploaded it yet. And I'll see you then. Have a good rest of your day. So that's the harvest for today. I made a dude out of potatoes. And we got beets and carrots. And I want to talk a bit about symbiotic relationships. So when I dug up this potato plant, I found this as well. And there was a hole and a little tunnel. So I think they're voles, but they could be moles. And there's little holes all over the garden going in and out of the beds. And I'm in year 1, so I'm in observation mode. And I'm not really seeing them eating anything. And if that's the trade-off where I get that and he gets a very respectable, you know, he's being polite. So I say he can stay. Maybe next year I'll have more to deal with, but that's the benefit of being a hobby farmer and not really caring if half of my stuff gets eaten. And that definitely brings up a point. Big shout out to full-time farmers. If you've never seen what a full-time farmer does on a daily basis, it's pretty astounding. I did it for 1 year, and I have no idea how there are people doing that for 5, 10, 20 years as far as production farming, and doing so in a ideally as sustainable and environmentally friendly a way, which definitely takes more work. You know, there's a lot more weeding and a lot less chemical spraying. But it's pretty astounding. So shout out to the farmers out there, and the voles can stay. Just harvested 1/3 of the remaining carrots. And again, in the recent video, I showed how much food you can grow in a small space And there's still that many carrots left after probably taking out a solid 50, 60 at this point.